Really, MicroStrategy is pioneering a new market. We're issuing securities backed by digital capital, backed by Bitcoin. The misnomer there is it's not a money glitch. It is a digital transformation of the capital markets.
I personally ask how many Bitcoin you hold personally and its total value?
I have more than 17,732. That was the amount I announced about 4 years ago. Haven't sold any.
In this insightful segment, Michael Saylor, Executive Chairman of MicroStrategy, unpacks the strategy behind the company's valuation. Despite holding Bitcoin assets, the company's market value exceeds these holdings by more than double. Saylor offers key insights into how investors should approach this seemingly inflated valuation. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. We appreciate the support and hope you enjoy the video.
Which is the Bitcoin balance sheet. We've got a software business, a technology business, and that was the springboard for us to get into Bitcoin. And now we've got an emerging Bitcoin securitization business where we're a Bitcoin development company, and we leverage our Bitcoin balance sheet to issue securities to the public market that no one else could so easily create as us. So if we look at the software business, well, that's a $500 million a year revenue business, and it generates consistent cash flows. And that got us to 2020, and that's still a very healthy business. It's a multinational, and we do business with thousands of companies all around the world, including customers in Australia and New Zealand and Korea and Japan and, you name it. But the best way to think about MicroStrategy if you're an investor is we're the largest operating company that holds Bitcoin. So if you have $17 billion of capital of Bitcoin, that's permanent. So there's no redemption rights to that. There's ETFs like BlackRock or Fidelity that are comparable to us in size, but those are overnight deposits. So if you said, hey, I've got $17 billion in deposits, people can take the money out of the bank tomorrow. Well, they just basically are a trustee holding the money, and they return it when they're asked to return it. You can't leverage it, and you can't build businesses on top of it. MicroStrategy has permanent capital. So for example, we can do things like we can issue convertible bonds on top of that capital. So if you have we have 16 to 17 billion in Bitcoin exposure. We have 4.2 billion in convertible bonds. The bonds we can issue fairly cheaply because we have a stock. The stock reflects the permanent capital of the Bitcoin, but that's not redeemable either. That means that it can generate a premium to the Bitcoin. So as people trade the stock and they trade the options on the stock trades at a premium to the asset value. And when the stock trades at a premium to the asset value, the company issues either equity or convertible bonds at a premium to the underlying assets. When we do that, we don't just put the money in the bank or in T-bills, we actually invest the money in Bitcoin. So you could imagine when the company issues,
explaining the business fundamentals, future growth potential, and the synergy between Bitcoin accumulation and the company's enterprise operations. This deep dive provides essential knowledge for investors navigating the intersection of traditional business models and crypto exposure.
We were to sell $1 billion of equity in the market, and it's backed by 500 million of Bitcoin at 100% premium, then we buy the Bitcoin, and 3 days later, we've generated a $500 million gain for our shareholders in Bitcoin. So that's very interesting. That generates what we call a BTC yield. Now, if we do the same thing with a bond, a $1 billion convertible bond, we don't do it at 100% premium. It might be a 200% premium because the bond comes at a premium to the stock. So when you go up 40% over a stock, which is 100%, now you're looking at something that looks like more like 180%. So now a $1 billion bond sold into the market's backed by $350 million of Bitcoin. We buy back the $1 billion of Bitcoin. We capture the $650 million gain, another BTC yield. So the real operating business of the company isn't the software business anymore. I mean, that's still there. It generates 75 million in cash flow, but one of those bonds would generate 10 years worth of earnings in 5 days. And so really MicroStrategy is pioneering a new market. We're issuing securities backed by digital capital, backed by Bitcoin, and then we're buying the Bitcoin back. So what that means is I could issue the bond in 1 week, buy the Bitcoin, capture the $300, $400, $500 million gain, announce it to the market, the stock would trade up, I could do another bond the next week. So instead of a traditional model where I raise $1 billion, I go find real estate in Auckland. I invest in the real estate, I leverage it up, and in 5 years, you determine whether I was smart or stupid, right?
History of our property market, you'd be pretty smart.
It's a 5-year investment cycle. And if I was smart, after 5 years, I come back to the capital market and I say, I'd like to raise another $1 billion. Now I have to find another set of real estate in Auckland or Blenheim or Sydney or Melbourne. And it takes another 5 years to figure out whether it worked. So what you have there is heterogeneous credit, and you have a slow investment cycle. MicroStrategy has homogeneous credit. We're going to raise $1 billion, buy Bitcoin, show you that we bought Bitcoin, that accreted Bitcoin per share. The investors look at it, it's an immediate gain. We just lived through 5 years and 5 days. And then once we've done that fast, rapid investment cycle, what's your next idea? I'm going to do the same thing again. I'm going to buy another $1 billion of Bitcoin. And so if you look at that against the backdrop of this year, in the first quarter, we did an $800 million convertible bond. We bought Bitcoin, the market liked it. The very next week, we went back to the market, did a $600 million convertible bond, bought more Bitcoin. It was accretive, the market liked it. So what did we do? We went back the next quarter, we did another $800 million bond, we bought Bitcoin, the market liked it. In the middle, we sold hundreds of millions of dollars of equity. And the next quarter, we sold more equity. We sold $1.1 billion of equity in Q3. We basically did that at a massive premium, so we captured a large BTC yield. We announced that, the market liked it, and then very next week we did a convertible bond, and that became a $1 billion convertible bond. And so what you see is we're running a very rapid investment cycle. We're developing a city in cyberspace. We call that city Bitcoin. It's like if we were the first public company to show up in Manhattan and we started selling debt or public equity instruments in order to raise money to develop Manhattan, and everybody else was using cash or going at a slow rate, and if we found that the two innovations are, one, we issue public securities to develop Manhattan, and the second is we can build a building in 5 days. Right? So you can't do that in real space. It takes 5 years to build a building. Right? And you can't hit the public markets for capital. But in cyberspace, I can raise the capital every month. I can build the building in 5 days. Our investors are Bitcoiners, right? So if you're a Bitcoiner, what do you think? You think Bitcoin's going to go up forever with some volatility. So what do you want? You want more Bitcoin per share. So how do you know whether the company is succeeding that's giving you Bitcoin per share? Well, we do the deal, we announce BTC yield. This is how your Bitcoin per share accreted. How long does it take? It takes a few days. So the real MicroStrategy business is to be the leading public issuer of securities in order to acquire Bitcoin. And as we acquire the Bitcoin, we're driving up the scarcity of the Bitcoin. We've now bought more than 1% of the Bitcoin. Now, there's only 450 Bitcoin available for sale from every day by natural sellers, the miners. You know, so 450 times 67,000 of Bitcoin, it works out to 20 million and change. So you can see what happens is if we're raising capital via tapping into the public equity markets and the public fixed income markets, and we're bringing that capital back and we're structuring our balance sheet and we're buying the Bitcoin, then that's good for Bitcoin. And of course that leverage that we get via issuing the debt, that's $4.2 billion of debt at 80 basis points. So we pay less than 1% interest for the $4.2 billion, which creates the leverage on the equity. And because there's leverage on the equity, that creates more performance. It also creates more volatility. Now, who wants volatility? The option traders want volatility. So in the options market, we've gone from a $3 million open interest in MicroStrategy options to some days 40 billion, right? So the options traders are trading high volatility. You could think of them as the options traders want 10x leverage on Bitcoin, 10 to 20x leverage, and maybe they want it long, they want calls, or maybe they want to short it 10x. They just, the haters want to short it, the lovers want to long it, right? But then MicroStrategy is like 1.5x Bitcoin. And then if you build a derivative on MicroStrategy like MSTU or MSTX, they're like 2x MicroStrategy. So that's like 3x Bitcoin. And so how well have they done? In like 2 weeks, they raised like $700 million in 2 weeks, no marketing. So on top of this stack, if you're looking at spot Bitcoin ETF, spot Bitcoin, you either buy Bitcoin or you buy IBIT or FBTC. They're offering you standard Bitcoin returns, 50 ARR with 50 volatility and 50 ARR, and 100% upside, 100% downside. That is the digital commodity. MicroStrategy, the stock, is 1.5x.
Check out the link below if you buy and spend coins. Check Nexo Exchange, and I'll see you in the next one.